Palantir stock just reported their Q3 earnings, and I'm seeing shares soar to an all-time high on this stock. We'll talk about that. We'll talk about the Q3 results. I think more importantly, the company gave us not only a Q4 outlook, but also basically for the rest of the year. This blows out of the water the previous guidance and really the expectations that Wall Street had for this company. We'll talk about that. We'll go through the numbers and see how nicely this company is scaling up. And then we'll look at this technically as well. Couple of things. When you blast to all-time highs, there can be an absence of sellers at that area. It could be where sellers materialize, but you obviously have an absence of sellers when you get over that critical range. This thing could continue to run. So we could have some areas of pullback. We could have stop losses, different types of things. If you're in Palantir, if you want to get in Palantir, those types of discussions. The other discussion that we have to have is here we have a stock trading at just 117 times forward. And when you look at it from a price to sales, price to anything multiple, it's still wildly overvalued. So those of you that made the right decision to get into Palantir, what you have to wonder is that a repeatable strategy, or did you more or less just get lucky when it comes to investing in Palantir? What is going on, investors? Hopefully you guys are doing well out there. Got a big one today. Over the past year, year to date, it's up big. Over the past year, you're up 180% on this one, up 144% year to date. And even over the past 6 months on Palantir, you're up 64%. It doesn't matter what way you slice this thing is just headed to the moon. Now you got a $93 billion valuation. You're up 13% in the after hours. So you're probably north of $100 billion valuation on a company in a Q3 that put up $725 million, not $725 billion, $725 million worth of revenue. That was strong. 30% growth year over year. Beat expectations. The expectations in the quarter was for 703. The high end estimate was for 724. The company came in at 725. So they've really hit their groove in terms of having Wall Street set expectations and really kind of coming over and above. That's why when you look at the Q4 outlook that the company announced on the most recent conference call was for 767 up to 771 million. This is $1 million in revenue. So the expectations for the fourth quarter was for 744. I just told you they're going to do 767 to 770. So they're blowing it out of the park. I mean, the high end estimate was for 774. So they're coming way over and above pretty much all of the expectations that were set by Wall Street. It's exactly what you want to see, particularly with a company with just a sky high nosebleed type valuation, which is just going to turn off a lot of investors. But this is exactly what you want to see from a growth company, from a company, again, with a high valuation. Now, when we start to look out into next year, makes you wonder if it could hold these levels and continue to have the outperformance, because you've had just explosive growth on this stock over the past couple of years. Can it continue into next year with 20% growth rate? Look, 20% growth rate, nothing to sneeze at. That's absolutely fantastic. But will $3 to $4 billion worth of revenue next year be enough, again, for a stock worth $100 billion? Now, any comfort, it's these financials are absolutely fantastic. You're scaling up your revenue, obviously, very nicely. We talked about that. It's a high gross margin business. Off of the $725 million, you printed $578 to the gross profit side. That's why when you look forward to the Q4, even into next year, when you start printing high sevens, $800 million, $900 million worth of revenue, a ton of it is going to flow down to gross profit. Now, what this company has done a very nice job over the past year is controlling all of its other operating expenses. Selling and marketing went from 176 up to 209. That's not much of a bump. Research and development, 105 up to 117. Again, not much of a bump. And general administrative from 128 up to about 138. So our total operating expenses increased by about 55 million from 410 up to 765. So when you grow your gross profit by over 128 million, yeah, you guessed it, your income from operations are going to skyrocket from just 40 million last year all the way up to $113 million. You flow down to a net income. They do benefit from some interest income right here. They ballooned that net income up to $150 million. Last year was about half that, at about $73 million. You flow down to the balance sheet, you better believe that considering how much money they're printing to the income side of the interest, they have plenty of cash. This company has plenty of cash here. Total current assets, sitting at over $5 billion. They basically have no liabilities to speak of, just $1.1 billion or about $1.2 billion sitting here at total liabilities. So from a balance sheet perspective, it's exactly what you want with these types of kind of high PE, high growth, high beta type of stock. You want there to be almost no balance sheet risk, and there's none of that. So it makes you wonder going forward, if the company can continue these types of strong results, what are they going to do this operating cash flow? So your net income on the last 9 month ended, you pull that down here strong, $390 million. Last year, it was like 3 times less at $120 million. You get to add things back in like stock-based compensation. It's a big one, over $409 million, $390 million in net income, $409 million in stock-based compensation. You gotta love the stock market that we're in. It's red hot. It's as hot as we'd ever seen it. So people and investors are just going to look past this. Now you get a turn in markets. You get a turn in sentiment. These are the first stocks that are going to get kicked out when your stock-based compensation exceeds not only your net income, but I believe it was pretty darn close to the revenue number. It's in fact about half of a quarterly revenue number. And in fact, I think it's off the top of my head, it's about a fifth of your 9 month revenue number goes all the way to stock-based compensation. Now we understand that these employees are not going to work for free, neither executives. And based on the performance of the stock and really the financial results we're seeing here, they do deserve this type of compensation. I'm just letting you know that in worse times, certainly we've seen it on the stock chart, when stocks get thrown out, this is a stock that's going to get dramatically thrown out because these are things not a lot of investors are going to be really falling in love at. But your net cash provided by your operating activities over the past 9 months is sensational. Nearly $700 million. Last year, it was $400 million. They don't really do anything on the investing side. Yeah, they bought some property, plant, and equipment, but it's not much. That's the beauty of this model, is its high gross margins, high operating cash flows. You did repurchase some stock, which may not be the best use of cash considering the type of interest rate they're earning on it and the fact that the stock is trading at a massive valuation, but they did buy back about $45 million. But you still got plenty of cash and cash equivalents, and there's basically nothing to really be too alarmed with here based on the performance. If this stock had half the valuation that it had, this would be an absolutely screaming buy. But again, at these levels, not only technically, but also from a price to earnings, price to sales, price to anything basis, it does make you want to pause just a little bit. From an extended valuation, we have over and above an uptrend that really has been intact since probably late 2023. This has been making a beautiful series of higher lows, confirmed by a series of higher highs. There's a couple of areas back down to earth where you wouldn't want to see this one kind of chop through. It's probably about the $36 level. Again, this is somebody that has a massive profit, maybe in Palantir, and maybe you want to lock in. It doesn't mean you need to sell your whole position, but you want to lock into some gains. I'd probably set a stop loss right here at 37, because if you break this 37 level, it's a key technical level that goes back all the way to the highs that we made kind of post IPO or post SPAC on this one. If you get back into here, you're probably making your way all the way back down to the channel, back down into 30. That would be the first area that would be rather exciting from a new standpoint. Investment is probably somewhere back with a 3 handle on this one. Until then, I think you let this one run if you own shares. If you don't own shares and you're comfortable paying a massive multiple on this one, well, you get back down into something with a 3 in front of it. That could be your first opportunity. That was Palantir's Q3, which was absolutely spectacular. The Q4 might even be even better. That is currently being priced into the stock in the after hours. We'll see how this one goes going forward. Hopefully you guys enjoyed today's video. We'll be back again soon with more. Good luck with your investments.